with several of my multimillionaire experts this week, and something is becoming painfully clear. I'm going to go ahead and validate it with Anna, Jonathan, and Ty later in the week. But let's just all agree that everything going on in the markets, real estate, stocks, bonds, crypto, is 100% without question the Fed's fault. The Federal Reserve has come in and is starting to act irrational. And you can see that they are either purposely or by accident, but still happening, increasing the wealth gap. The wealth gap in the United States has increased in the last 12 months because of this K-shaped recovery. Without question, the Fed has benefited like no other time, the top shape of the K. And if we are to believe the Fed, they are going to continue to do that. So while it is fun, it is interesting to blame the Fed, I want to ask you, what are you doing to take advantage of the playbook that the Federal Reserve has given us? I have a couple of examples, which I will get here into in a moment, but let's just remember what the Fed has done. The Fed has artificially forced rates lower. The Fed has come in and started buying mortgage-backed securities, $50, $100 billion. They are making asset prices up. They're going to likely come in with Operation Twist if the 10-year gets out of hand, thus flattening the yield curve. But what are we doing? Are we going on margin in the stock market, hoping that we are smart enough to get out before it catches us? Are we moving into crypto, again, using margin to catch bigger and bigger waves? Are we moving into real estate? Are we doing multifamily value add and using short-term debt, interest-only debt? Or are we going into single-family homes that, yes, are going higher, and wow, Case-Shiller Index has never reported a double-digit number. It was like 11.3%. That is 100% Fed-induced. It is exacerbated by lack of inventory. But there is a playbook out there for us if the market unfolds as I expect in the next 12 to 18 months. The other thing going on is I can't believe the Fed is trying to tell you and me that there's no inflation. Inflation is everywhere, and it is only going to get worse. A friend of mine just went to Disney World in Florida, and rental cars, while sold out, were going for $300 a day. All kinds of services are already kind of booked. The summer travel season is booked or booking up fast. Airlines are raising prices. Construction material, I was speaking with Matt, the lumberjack landlord this morning. He told me he bought a 4x4 for like $25 or something. Prices are going up. Single family rents are going up. Housing prices are going up. Oil, freight, shipping. I do not know what the Federal Reserve is doing. The Fed should come out immediately and say, folks, I told you this was coming. This is, a moment in time. At least they would be recognizing what you and I are doing. But here's the deal. Maybe the Fed wants inflation. I've never thought about this before. Maybe they want high inflation. They don't want hyper. There's a distinction between high inflation and hyperinflation. High inflation allows them to pay off the debt that we are accruing now with cheaper dollars in the future. I don't think there's anyone that wants hyperinflation. But high inflation, we're talking 4, 5, 6%. That could be good for the federal government. So I ask you, if the federal government wants inflation, let's call it 5%. And I don't know if they do, but I'm just trying to play with this because it is so nuts what they're doing. If the Federal Reserve wants inflation, say at 5%, and they're going to do everything they can to force long end rates down to say 4%, what does that mean we should do? Well, it means that we should go get as much cheap 30-year money as we can. If we can borrow at 4 and inflation is 5, that's good news. So again, I think what we are going to see in the summer selling season, and you have likely seen it with Omar's video this morning, my real estate entrepreneur, he is saying that the market is going bananas, but he's also talking about more listing. Move up buyers are starting to list, and I think the quality differences will expand. You have to do the work though. This is not a time to gamble. This is not a time to just say, I'm going to overpay. You have to calculate the yield. You have to make sure you're getting a good or great deal so you have cushion just in case the market flattens. We cannot continue to have 12% appreciation year after year after year. That is not normal. That is not healthy. And that will lead to a balloon or a popping or a crash. I am not calling for that. I expect interest rates to be higher in a year. I expect inventory to be up 100 or 200%. But all of that means that us as investors, we need to get on our horse. We need to look at our market every day, and we need to be ready to write good or great offers. If you do not have a single rental property today, or you have less than 10, your job in the next year is to get at least one more. One more. Go get 4% money in what could be a 5% inflation world. I am starting to think the Fed has a longer term play and they don't want to spook the consumers. I think the Fed wants inflation. I think they want to inflate debt away. I think they want to have it for years to come. And if that's the case, go get that residential 30-year money where the bank cannot foreclose if the asset value falls. They cannot foreclose by interest rate resets like the adjustable rate mortgages of 06, 07. Get 30-year money. I don't know about you, but what do you think? Do you think aren't you seeing it inflation? Aren't things that you are buying, gas, groceries, things getting more expensive? I know they are for my family. What is the Fed thinking? Inflation is here. I think it gets worse before it gets better. But again, I go back to the point that the Fed is giving us a gift. They're giving us a gift of cheap 30-year money, artificially low. And if you can get sub 4% 30-year money, I think that's a good thing. So let me know what you think. What do you think the Fed's doing? You think inflation will be 5%? You going to go get your first or your next rental property? Again, I think residential. I think multifamily, commercial, 5 and above. I think there's interest rate risk. If inflation goes to 5% next year or the year after, interest rates could be 7.5%, 8%. That is going to hurt multifamily because multifamily resets 3, 5, 7, 10. But if you get 30-year money at 4% and inflation's at 5 and suddenly mortgages are at 8%, you are a happy person. You do not have to refi. You have no interest rate risk, none of that nature. So again, say it with me. Everything is the Fed's fault. The Fed is creating asset bubbles. The Fed is lying to us about inflation. But who cares? Let's take advantage of what's going on right now. The Fed wants us to buy residential real estate. The Fed wants low 30-year mortgages. So let's go buy some. Have a great day.